The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 24th, terrific Thursday edition of today's Trader's Edge show. I'm Rhodes TV, Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. In fact, let's make sure we have an extraordinary holiday weekend out here today, the last day of trading. And of course, you know the easiest way to do that. It's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And that's really the role of life. Today, you and I get to go look at the circumstances of the bulls and the bears. We're going to go figure out what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon on this terrific Thursday. I want you to know that I'm grateful for your presence, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally, 727-445-1044. Of course, Steve at TFNN.com. Hopefully I can get your email before the end of the show. And, of course, inside the Tiger's Den, ping, an IM will do. So let's go get this market. Well, it's already been kicked off. Let's go see what it's doing on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 70 points at 17,432. S&P is off 9 points. She's trading at 2028. NASDAQ Composite down 13, trading at 47.55. Russell 2000 off 2 points, trading at 1073. The DAX closed down 171 points. The FTSE closed off 92. Gold is trading back about $3 right now, just trading sideways for the most part. We'll take a look at that on the short term. Why did gold stop where it did? Well, you know why it did. Because of our favorite patterns that are out there. They work on all time frames, and so we'll go take a look at that. You've got silver down 6 pennies, so that's trading sideways. Light sweet crude off 37 cents, traded at 39.42. Making a move to the upside, well, at least moving higher, we should say, this afternoon. Leading the charge out here, you've got Amazon up $8.50. That's 1.5%. PVH Corp, that's up nearly 9%, up $7 and change. Tesla's up about $5, that's up 2%. Signet Jewelers Limited, that's up 3.5%, that's $4 to the upside. Tesoro Corp, up nearly 3%. Mercury Systems, that's up 15%, up $2.50. To the downside, leading the charge here, dollar-wise, you've got United Therapeutics, that's up 9%, down about $11. Intuitive Surgical up $8.50. Priceline down 8%. Portola Pharmaceuticals down 27%. They're taking the shorts. Chipotle down about 1.5%. That would be off $7. Okay, so where do we begin the day? Well, I said, hey, let's take a look at gold. Why is gold just really trading flat out here? Well, if we take a look at the message of the markets, we just simply go to a 30-minute chart out here for gold. Here's what we are going to see at specifically 3:30 this morning as gold was moving lower. What was it doing with? Less energy. Maybe it might not have seemed like that to anybody who was long gold up here at the 1260 level when it was down here at the 1212 area. But the reality is gold, silver, the equity markets, ETFs, individual stocks, they all behave the same way with regard to communicating to you and I. We just have to learn the language of the markets. Well, one of those languages is when is it a real move? When is it a head fake? One of the ways that you and I get to identify that is understanding when price moves higher, starts doing it with less strength, the less momentum, moves lower with less momentum as well, so less weakness. And that's exactly what gold was doing. So we knew that it was moving down here at 3:30 and at 4:30. That's when we saw the cavalry. So this was setting off the horns, the alarm bells out there. Hey, cavalry, are you going to come in and try to support gold at this moment? And they got the message. They took a little while, an hour, to get to work. And when they did, they formed that nice little bullish engulfing candle at 4:30. A little bit of follow through to the upside here on the very next session at 5 a.m. And then we can see that price got above what? Got above one of our horizontal levels of support and or resistance, in this case here, resistance. That took place at 6 a.m. That is when price was moving above a 30-minute TAS market profile. So that's a beautiful thing. Gold might actually move a bit higher from here. It can if it's going to clear the 1222.70 mark, to be exact out there. Why do I say that? Well, as we take a look, or we explode this chart up here, one of the things that you're also going to see is that a brand new market profile formed at 10 a.m. this morning inside of the gold contract. Now, when we take a look at that, you can see the resistance level. We can see that price over the next hour stop that resistance. Again, we're taking a look at the body of the candle, because that's truly the essence of price, versus taking a look at the extreme moves, the wicks, the shadows, in this case here, upper shadows. Nothing more than the extreme emotion during that 30-minute chart. So we know 1222.70 is a level of resistance. If price closes above that, then price will move higher. To what level? We'd have to go take a look at other time frame charts. Now, it may not move above there. We have seen a period of time right back here off this where was it? All the way back here. Here we had another situation. This takes us back to the trading day of March 21st, where gold was moving lower. Same kind of pattern. The cavalry didn't show up here until about 5 o'clock in the morning. Looks like that's a good time for the cavalry to come to work. Wonder if that's a coincidence out there. Something to think about. Now, if we take a look at 5 a.m., you had, this is on March the 21st, you had the bulls show up, bullish engulfing, bull sash confirmation on the very next session. Got a nice little market profile. We can see that level held as a resistance. Now, this profile here was set up as the bulls, the buyers were the ones that were in control out there. Prices ended up moving higher. So if we take a look at the current profile out here, it's a slight advantage to the buyers, but very slight. So slight that we really can't give them the advantage out here. So that's what's going on in gold. Is gold going lower? So much lower that it's going to blow most people's minds. I don't care which side of the trade you're on. The only thing that I care about is that you use stops out here. But this is just the beginning of the slide to the downside. Now, yesterday is an important day for Goldilocks out here. Why is it so important? Well, if you are one that believes in the stars, or more importantly, if you believe in satellites, you believe in the moon out there, the interesting thing about gold and full moons, and yes, we had a full moon yesterday, is that full moons typically mark the initiation point in the move of gold. And what did gold do yesterday? It moved lower. Oh, I've got the wrong, I don't have the gold chart up here. I think that would probably help you. I don't know why. I know I touched the button. There we go. So as we take a look, here's what gold looks like as we speak today. If we take a look at the weekly chart, let's just go see what gold here has done for the week out here. On a weekly basis, still has when gold will really start rocking and rolling to the downside, when we'll really start to freak people out, is when we start to see a close below this trading session, February 11th. The low out there is 1196.30. Will it happen? Yeah. Can I guarantee it? Well, yeah, I'll go ahead and guarantee it out there. Of course, I can't guarantee it, but that's what gold is going to do. And when it gets below that level, look at this period of individuals that are buying, just with regard to the gold contract. You take a look at the GLD and other things out there. That is going to trap folks like rats out here. And then when that happens, where's it headed to? I don't know exactly. I just know it's headed lower. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 69 points, straight out at 17,434. But we're going to go take a ride on the reading. We're going to go take a look at, because we're going to read the message of the markets. Now, we were looking at gold. We were taking a look at a 30-minute chart. We were noticing how price stalled after it gave us that bottoming signal, short-term, very short-term bottoming signal, with regard to when the cavalry was going to show up. And the same type of pattern occurred this morning in the NQ. Were you thinking that the market was just simply going to go crashing lower out here? Well, one of the things that we know is that as price was moving lower out here, let me get my little crosshair into, this is the time frame of 3:30 yesterday afternoon. Price was moving higher, doing it on less relative weakness out here. The cavalry arrived as we went into the 4 p.m. cash close out here. A little bit of additional move higher to confirm that pattern. And we can see that that level held all the way until about 2:30 this morning, you know, when Europe decided to come online and crash the party. But as it was also crashing the party, the NQ out here, which is what we're looking at, was moving lower and continued to move lower with less relative weakness out here. And it wasn't until the market opened, nearly right at the market open, but not exactly at the market open, but nearly right at the market open, when the NQ made its low tick thus far for the day. But as it was doing that, we had that same kind of price relative strength divergence pattern. And in one swoop of 30 minutes, you had a nice big old reversal candle. You had a Morningstar, three-river Morningstar out here. You had a key reversal session. So what does that tell us? That says that this low that came in earlier this morning, that was at about 9 o'clock. I believe that low tick was during the 9 o'clock session, was 43.65. Let me make sure. Was it 43? Yeah, 43.65. That is a muy importante level to hold out there for gold, because really the strength inside the market is coming from, well, maybe two areas, but one area for sure, and that happens to be what had been the weak link out here, that being the NQ. So it formed a nice little short-term bottoming pattern. What we don't have with regard to the most recent market profile that formed out here, we've kind of got ambivalence. What do I mean ambivalence? Well, you can see the bottom of that box is below the bottom of the previous box. The top of the current box is above the high of the previous box. It's always confusing to me as to what the real message is there. Well, then we just simply skip that and say, well, just take a look at what the bulls and bears are doing inside that TAS market profile right now. And we can see that that point of control, this is the 30-minute time frame that you and I are looking at, is closer to the resistance line. Those little red dashes on my screen out at 43.89. So 43.89 is the level of resistance. You get above that, you close above that on a 30-minute time frame, you're probably going to go ahead and set up an A to B equals CD to the upside. If we take a look at what that would look like here, that would give you a price projection. The 1-to-1 would be about 44.02, the 1-to-1.272, 44.11. I don't know whether it's going to do that or not. I know that that is in play, and it's in play until the lows at 9 o'clock this morning get taken out. So that's what's going on in the 30-minute time frame. There's another number that you and I, let's go step up to one larger time frame. Let's go take a look at where did I put it? I had to put it someplace close. Someplace we go. If we take a look at here's the key. Yesterday, I could not have been more clear about the numbers to be paying attention to in the VIX and the S&P 500. I'm going to go ahead and give you those updated numbers today. However, we're more interested in what's going on inside the NASDAQ Composite and the NDX, as well as the Dow. So we'll give you those numbers as well, because those are the levels where things are strong. So the close today is really going to be important. If the NASDAQ Composite is able to close above 4757.96. Not to be exact, but I want to be exact out here. 4757.96. You close above that, then thus far, the move, at least to the downside, as far as the NASDAQ is concerned, is just testing an important level of support. You close below that, even a penny, but come on, we know we want to be more than a penny. If you close below that, it's going to join the long list of indices that have said, guess what, the market has turned. How far it's going to go down to, we could take a look at a bunch of different levels out there, but it will have said that the market has turned. Now, inside the NDX 100, that number, to be exact, to the penny, go ahead and write this down, 4384.04. You're trading above that now. The NDX 100, it's given it a rumble in the jungle. What was it called, the rumble in the jungle? No. What was it called? It was maybe it was the rumble in the jungle. Was that it? Was that the George Frazier? Was it the was that the George? I'm thinking George Foreman, just because I had a piece of grilled chicken. The Joe Frazier Muhammad Ali fight. I don't remember. It's in any event, what am I even stalling here for? The number 4384.04, that's what you want to be paying attention to. And inside the Dow, the number 17,437.93. You close below those numbers, they will join the S&P 500. They'll join the VIX above the number that I gave to you yesterday. They'll join the New York Stock Exchange now below levels of key areas of support that now become resistance. They'll join the Wilshire 5000. They'll join a slew out here. These are the potential holdouts, and we want to see how those indices close at today's market close. Okay, let's go take a look at some special requests out here for Tammy in Reno, Nevada. She would like us to go take a look at EMC. So let's go take a look at EMC, try to get a feel. I believe the question was looking for a buy inside of EMC. So let's go take a look at EMC, see what it has done up to this point in time. Right now, it's trading out at 26.55. What do we know about EMC? Well, one of the things that we know is there's a area here of a resistance of major kind of distribution that took place on October 21st. We got to put on the volumes here, so because that doesn't help us. So we want to take a look at what kind of volume has this thing gapped down with a wide-ranging bar out here. Well, big volume behind that move, and that was the volume of 60 million shares. Let me pull this over here so you can actually see it. If you take a look at my volume metric inside, all you want to do is look at that data box in the upper right-hand corner of the screen and look at the very bottom panel. It says volume 60 million shares is what this thing had moved down to. So prices right now for about the last 2 to 3 weeks, ever since the trading day of March the 1st. So we're really at 3 weeks worth of trading out here. It has been trying to, punch its way up above that level of resistance. It's not doing it with any kind of volume to speak of, but if you're looking for a buy area right now, would certainly not be the time out here because it's truly up against resistance. Hey, if it can break through this level of resistance, then where price could move up to is where the gap really began. That's going to be somewhere in that range of about 27.81 to 27.40 out here. If we look for other pieces of information, so let's go turn these things off. Let's just delete those lines. We know that's an area to be paying attention to. Let's go see what our market profiles, see what kind of information that they can provide to you and I. So let's look at both daily and weekly. So interestingly enough, if we take a look at where the weekly resistance is, where the daily resistance is, you can see that price is trading right into that weekly point of control. Right now that is priced out at 26.53 and you are trading at 26.54. Yeah, I'd say it's right into resistance. If you wanted to go ahead and buy this, your best buy level, your potential Best Buy level, not Best Buy the retail store out here, but Best Buy that level, the first place to consider going ahead and attacking this is really at the bottom of that daily box out here. That is priced out at $25.98. If price moves down to that level, just make sure that it's coming back with less than 9.8 million shares. Maybe a tight trading range, but again, I don't know what her total outlook is and what she's trying to do with this trade. Another great entry area would be 25.04. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 56. S&P is off 7. NASDAQ Composite down 13. The Russell 2000 not that far away from turning green for the day. It's off by 1 point and a couple of shekels out there. Let's go take a look at VMware for Tammy in Reno. As we take a look at VMware right now, it's trading out at $50.97 out here. What do we know about VMware? Well, as it has made its most recent bottom, let's go ahead and explode this chart up on the screen out here. We can see we had a high volume candle session from back on the trading day of January 27th. Now that level, the bottom of which is, let's go ahead and draw a line. I think we've got the color green today, meaning green. We can see that that level was tested. So there was 7.9 million shares to the downside. That low was tested on the trading day of February 2nd. 2.4 million shares, 1.7 the very next day, 2.5 the day of February 8th. It was tested on February 9th with 1.8, tested and rejected with 1.5 on February 10th, tested and rejected with 2.4 on February 11th. So you can see that it didn't have the energy to bust out the lows out there. No, this is above the area where it had gapped down on January 26th out there. Should have been a level of resistance. It wasn't. Maybe it acts as a level of support. That's 47.64. So we'll go ahead and put that on the screen out here. Now there was the potential that it's trying to form an A to B equals CD to the upside. If we take a look at the highs out here, the 2 trading days, February 26th, 50.70, 51.45, 51.46 on February 29th. 1.5 million shares. What we can see out here at that level, as price got above there, it did it with, remember, it's 1.5 million shares. You did it with, or it did it with 1.6 million shares on the trading day of March the 18th. So in one sense, with regard to VMware, it has a confirmed A to B equals CD to the upside. Now, it's pulled back today. But let's go take a look at that potential price projection here in VMware. So the A point is going to be the low from February 11th. The B point is going to be that high from February 29th. The retracement, a very shallow retracement, looks like that low is right around, let's see here, March 9th was 48.54, 48.54. So it looks like 48.54 is the number. Doesn't matter which day we choose. So I'm just going to go ahead and choose the day of March the 10th. So this has a projected move to the upside between $56 and $59 out here, $57 to $59. Now, when we take a look at what it's doing today, we can see that it is pulled back. And it's back below that B point. Does that mean this is disqualified as an A to B equals C to the upside? No. Not at all. It wouldn't be disqualified until we see the actual C point. That's the low of March 10th get taken out. But you did have the cavalry, the bear cavalry, show up inside VMware yesterday when it formed that little bear sash candle, and you're getting a little bit of follow through here today. Volume-wise so far, you're at 648,000 shares, so you're pulling back with basically light volume. So this still looks pretty good. Now, the question that Tammy had was, and again, I don't know the time frame that she's looking at trading this, but we're taking a look at the daily charts out here. So we're giving her a daily message. Let's go see what our market profiles, those hidden levels of support and resistance, show us. And what they show, and I'm going to go ahead and get rid of those other blue line or green lines on my chart just to clean this up for you. Some of you may be copying this. Especially if you're inside the Tiger's Den. And what we can see here is right now today, prices come down and it is testing the bottom of its daily market profile. So the bottom is 50.78 of that profile. The low today is 50.85. From a daily box perspective, it's really set up where this is more of a bullish bias, and it says that 50.78 ought to hold. So if you are really looking for an entry point into this because you are committed to the whatever it is that you're looking at, Tammy, that this is going to move higher, plus you've got that confirmed A to B equals CD, today, right now, would be the time to go ahead and move into this. And if it closes below 50.78, I think you just simply close out that trade altogether and you look for the next entry point. You might say, where's the next entry point? Well, the next entry point, and we take a look at the daily profile, the most recent daily profile out here. See how the bottom of that box held as support out here in each time that it was testing down there? This is really from the time period of, it began on March 3rd, testing. It held that support. So we know the bottom of this profile box here should be pretty good level of support out there. If it fails, it's sending to us a different message, a message where maybe VMware heads down to about 47 and 52. So that's using our A to B equals CD tool, that lightning bolt tool, as well as using our TAS market profiles, and that is on VMware. If we take a look at this on a little bit longer term time frame, what the weekly chart might be communicating to you and I, one of the things that we notice is there's several potential A to B equals CD patterns here to the downside. Let's go see if anything has completed. The most recent one would be when VMware took out the swing point from the week that began January 26th. Now that had 24 million shares on that trading session. It was taken out with a gap to the downside and volume with 44 million shares. You don't get more bearish than that inside of VMware. So now let's go take a look at, on the weekly basis, what its message is, looking at this little short-term A to B equals CD pattern. The A point out here, well, it will, here we go. What I'm using for my A point is a week that began March 31st in 2014. The B point is that swing from January 26, 2015, makes a retracement up to a high on August the 3rd. What VMware has done on a weekly time frame is this thing has made a 1 to 1.272 A to B equals CD. Now, the actual price projection there is 43.52. The actual low was 43.25. So, 52.25, it's a little dyslexic, which is really a good thing. Why do I say that? Hey, dyslexia means that you're going to look at things a little bit differently. And let me tell you, when you are trading and investing and you are taking a look at these markets, that the charts out here, you better be willing to look at things differently. You should really be looking at both sides of the trade to understand what the market is communicating to you and I. Now, in the case of the weekly chart, you've got this little four-river morning star pattern out here. That's where the market, you've got kind of a whitish-bodied red candle to the downside here, the week of January 25th. Two narrow-bodied candles below the actual body of that on the following weeks, and then a nice little green ranging bar, wide-ranging-ish type bar for this equity to the upside. That is a bottoming pattern. That says that VMware on the weekly basis, so if you had a real long-term outlook, should be bullish from the standpoint that it's completed a to B equals CD to the downside, did the 1 to 1.272, and your stop would then on a longer-term trade would be somewhere below 43.25. You see, the whole thing to trading and investing is all about really one thing. After you have gone ahead and identified your trade setup, it's really all about position sizing. Now, some of you might say, what the heck is position sizing? It's nothing more than the number of shares that you're going to buy or the number of contracts that you're going to buy. You see, the whole key to trading and investing is only risking 1%. On $10,000, that's $100. Once you know your risk, all you have to do is figure out where your stop is, divide that risk by your stop. That's how many shares you buy. It's really that simple. You could buy it right now in a long-term view, buy it at 50.90, have a stop below 43.25. Might sound like a wide stop, but that's how you would play this money game out there. So that's our analysis on VMware. We've got the Dow down 60, S&P's off 8 points, NASDAQ Composite down 15. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 56, S&P is down 8, and I had a request to do an analysis of sake. Now, sake is actually I don't drink too much. The things that I do drink, sake, all the time. Only when I'm having sushi or fresh fish, which is pretty much all the time. I don't really drink all the time, but I do love sake. And I recommend it. Many people have not had good sake or don't really know the best way or which styles of sake that one should drink. So I'm just going to share that with you right now. Why not out here? I'll give you some pointers to help you. For those of you that like to go to the sushi bar out here. So the number one, you've got to drink it the right way, and you really want to drink it cold. Now, not cold, ice cold. So what you do if you go to a sushi, and you want to make sure that you're not buying stuff that's brewed in Canada or brewed in the United States out here. And typically, they'll have a list of sakes. You can look at the bottle. There's a label on it. You'll be able to make that determination pretty quickly. If you go to a place regularly, call ahead of time, or once you figure out what it is you want to go ahead and order, call ahead of time and have them stick it in the freezer. You want it ice cold. How cold? Well, when you bring that bottle out, what I want you to do is have them get you a little ice bucket, put a little water in it, stick that bottle in there, and when you pick it up, the ice ought to stick to the bottle. That's how you know when you've got a good bottle of cold sake. Now, there's basically 5-6 different styles, and you'll see these names typically on the bottle. You'll see like Ginjo, you'll see Junmai, you'll see Junmai Ginjo, you'll see Junmai Dai Ginjo, you'll see Dai Ginjo. Just do the syllable count. You want to order the sake that's got the most syllables out there. And the reason that you want to do that, like you want to buy pretty much Junmai Dai Ginjo. Why? Because those sakes are pure. There is no sugar in them. It's the only alcohol out here that has no sugar content. Yeah, it's made out of rice, but there's no sugar in it. If you go ahead, you get those other sakes a little bit less quality. They use distilled alcohol in there. So it's not going to be the same. The feeling, the taste, and the flavor and everything is not going to be the same out there. But you want to have it, and you really need to have it only with sashimi or sushi out there. I promise you, you will love it. It's a great buzz. It is a great because it just enhances those flavors of sake. So look for the Junmai Ginjo, Junmai Dai Ginjo, or just the Dai Ginjo out there, and you will love it. But make sure that is coming from, now, the best places in Japan that you can get it, Niigata. If you can find sake from Niigata, you will not be unhappy whatsoever. Why? Because they've got the best water out there for brewing sake, and they've got extraordinary rice. So that's and I wish that there was somebody that had that stock symbol, sake, out there, SKEW, but they don't. So we'll just have to go with that. Okay, back to the markets. You've got the Dow down 56 points, the S&P off about 8. What do we want to look at here? Take a look at a couple of stocks. We've taken a look at what the markets need to do with regard to the NASDAQ, the NDX 100 out here. Let's take a look at what do we want to take a look at here? Let's go take a look at some of the sectors inside of the S&P 500. That sounds like a good thing to do. Let's go take a look at the technology sector, the XLK. Of course, we know this sector here is weighted by Apple because it's got the largest weighting inside here. We're looking at let's look at the weekly chart. The week's going to end. We're going to be 1 day short, but let's just go ahead and see what the heck. As long as we're on a weekly time frame, let's just go see what the week is doing. So for the week here inside the XLK, thus far, you opened at 43.49. We're trading at 43.45. That, hey, happens to be a doji. So we got a nice little Japanese candle out there. Now, a doji has got a ton of meaning in one spot, and that is up at resistance. Why? I don't know. I just know that it does. So we know that we're up near resistance because we're up near the highs out here. And if we take a look at it, where the XLK is trading into happens to be, on a weekly basis, it's November 30th, 2015, swing point high. I believe that is the all-time swing point high out there. I believe that it is. So if we take a look at that swing point for the week that began, November the 30th, 2015, I think that Thanksgiving was the 28th. So this is that's the week after Thanksgiving, had volume of 59 million shares. You're going to do 30, well, you're at 35 million right now. So we know we're going to come up shy here, but you are still closing inside that level. So the low is 43.29, and you're trading at 43.46. If, in fact, you get a close today in the XLK below 43.29, you'll have a failure on price and volume on a weekly basis. And if you close inside it, even if it's with light volume, it says you can go test the high. You have to reject the swing point in order to go ahead and say you have got a test of a rejection out here. So the number here inside the XLK to be watching, 43.29. You close inside it, it says, and that's the number one weighting inside of the S&P 500. The second weighting, I believe it's the XLF, if I'm not mistaken. It's number 2 or number 3. So let's go see what the XLF is doing. Of course, we know the XLF had a nice little hammer candle down here the week of February the 8th, but we're really not interested in that. This week here, you've got a reversal bar, most certainly, with this trading right now at 22.22, room 222. Takes us back, does it not? What is this thing trading into? Not a whole heck of a lot out here. Certainly not a swing point. Not into a gap, not into a level of resistance or anything like that out here. I don't know why I had that red line. We're going to go ahead and get rid of it at this stage. So the XLF, from a weekly perspective, not really providing us with a ton of information. Let's see if there's anything out here on a daily basis. Now, you've got that island bottom down here at the bottom on February 11th. That is about as bullish as you can get with regard to a pattern out here. So we can see here what has stalled the XLF. There was a gap down, so you're trading into a series of gaps. There was one on January 7th at 22.83. The volume on that gap to the downside was 74 million shares. You have gotten up there, or I should say the XLF has gotten up there with light volume. 52 million shares on the 18th, last Friday, and then 38 million shares on Monday. Of course, we know Monday and Tuesday were extremely light volume days. Yesterday, a bit more volume. Today, less volume than yesterday. Of course, we really pretty much have the beginning, since lunchtime, the beginning of a holiday week here, with tomorrow being a Good Friday and the market being closed out here. So we know that the XLF is stalling at a natural level of resistance out here. If we look at the XLV, the healthcare sector, I think that's number 3, waiting inside the, not VLV, XLV. There we go. If you take a look at XLV, this is the daily chart now that's on our screen. I'm going to go ahead. I don't know what those red lines are, so we're going to go ahead and get rid of them. What is this thing doing? You know what? With regard to the XLV, let's go ahead and put our TAS profiles. Let's go see if we can learn something with regard to what the XLV is doing by looking at those horizontal levels of support and resistance. Well, inside the XLV, the interesting thing here is we can see that price has pulled back today to test the bottom of its market profile out there. And we can see that as market profiles go, that point of control, which is at 67.13, very close to the support level being 66.94. So as long as 66.94 holds inside the XLV, that says it can easily go ahead and make a run for 68.23. You get above 68.23, this thing likely stalls at 68.97. That is the weekly market profile. So the XLV hasn't really busted to the downside. That's taking a look at the daily chart. Let's go look at a commercial since we're out of time. Then we come back. If there's no special requests out there, I'll find something for us to spend our last segment with. This is Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's down 44 points. The S&P is off 6. But let's go take a look at the Russell 2000. Trading right now at 1074. It's off less than a point out here. So you've got, truly today, you got a little doji style. But I don't know that that's where it's really going to end up. Now, let me turn off those profiles because they don't really apply to the indices per se. So let's go ahead and take that off the list out here. So what we know about the, let's look at the week chart. Let's see what we're trading into from a weekly standpoint. Maybe we'll go take a look at the IWM as well. So clearly on a weekly base, you got a little reversal session out here, big old bearish engulfing candles engulfed the prior 2 weeks out here. As far as levels of resistance, you haven't really hit, I don't think, let's say a trend line. No, you haven't hit the trend line. That does not mean that you're going to, but it certainly has not broken its most recent downtrend. That's coming off of the highs from a weekly perspective back in June of 2015. If the question is, if I'm hearing somebody say somebody just asked me, how high can this bounce? Well, yesterday I gave you a number and said if the Russell 2000 closed below it, that was a sell signal. That is still true. That also became a level of support. That once broke, level of support ought to become a level of resistance. Do you remember what that number was? It was right around 1083. Let me see, where we trading? 1074. So if the market is able to bounce further, and certainly that's the message that came from the NQ chart, right, that we looked at, but that is not a message that's been confirmed until we get above 43.89. So 43.89 is a resistance out here. But let's go ahead and take a look at both sides of the trade. The most bullish side is that the NQ gets above 43.89. If that does that, then the Russell 2000 ought to participate in that move as well, and where the Russell ought to find resistance from a daily perspective, where the market is still turned to the downside, at least with regard to the Russell, is going to be right in that 1083 range. You're trading at 1074 as we speak right now. Let's take a look at a couple of individual stocks and see what they're doing. Let's go see, what do we have percentage-wise to the downside out here? You got Portola Pharmaceuticals, PTLA. So it looks like they've got a phase 3 trial problem out here. And what problem, I don't know. This is the weekly chart. It's a problem, certainly from the weekly perspective. Looks like this is an equity that went live for trading back in May of 2013, somewhere near a price point of about $15 and a quarter. You're trading at $20.39 right now, and clearly you can see big volume. So it looks to me like PTLA, the ticker symbol, that is Portola Pharmaceuticals, is headed all the way back down to its IPO area. That would not make too many shareholders inside this equity very happy at all. This had once traded up here in the trading week of September 2015 to as high as $58 out there. Also to the downside, let's see, percentage-wise, anything showing up. Spark Energy, SPKE, is trading. Looks like they were out with their numbers out here, and the market certainly doesn't like them. Volume-wise this week, 424,000. So this is not your most liquid. That's a weekly chart that we're taking a look at. This is not your most liquid of equities out here. This thing had broken out, nice wide-ranging bar on January 22nd. Price thus far has pulled back into that area, but with too much volume. You've got 290,000 shares today. Now, this still may be a level that acts as a support out here, which is right around the lows of about 1853 or so. So today, folks, the markets are closed tomorrow. We'll be back with you on Monday. It is Terrific Thursday. You know what that means? That means our polar bear, Mr. David White, he's going to be up next. He'll entertain you. And then we've got the Tom O'Brien Show from 3 to 5 and Andy Eck to take it on home. Have a great trading day. Have a safe weekend. And if you get a chance, good cold sake. As many syllables as you can find. Make sure it's ice cold. Take care, folks. See you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.